Let's take the love presidency and some. Got winner, got a loser, chain smokers and boozers. We got yucks, we got bikers, we got thirsty hitchhiker, and the girls next door. Flying movie star. Got truckers, looking and suckers. Got hustlers, we got fighters, early birds and all the and the veterans tell their battle scars. I love baseball. It's not me. It's a big smile on my face. It ain't too far. Come as you are. This bar. I've seen short skirts. You got high techs. Look collar boys and rednecks. We got low. Lots of hookers. I've even seen dancing girl, hookers, and we face and John. But I love this bar. People's night. This turtle. That's no. Face. Face. No. Cover jaw. As you are. We got the voices and about to man. The old jukebox and real bad man. We got waitresses, we got bars, right? And dumbass and one of those guys. We have to go get it. It's a number 672. Wow. It's gone. Beer 30, though. Gotta take it on home.
Oh, you're right. Thanks, Kevin.
What's that? A southern soul got your barbecue lit. We can bet on goes the vicious line at the end of Lipton Hill. And at the beach on the Lottery, we'll lay a blanket down. Watch that sunset sinking low, the cheerful island sound. They got me steady one. Learn to do better view. What South Shore with a smile. So say silence. Say the miles. The little silence saying, yes, take that. You not seven half shit, man, he'll give it to you straight. We're on a line, down and 12 oysters on your plate. And if you're just passing through,
Thanks, Kevin.
stop, see,
Good morning, everybody. We'll get started here in about 2 minutes.
Maybe a lot of you is written what's that you find. Yes,
Good morning, everybody. Happy Friday. So thanks for being here. This is our live stream. We do every Friday here, open to everybody. Before we dive in, a quick heads up, if you're checking out the Elite Trader funding, we do have a couple of giveaways throughout the session. And you know, the giveaways are the eval accounts. So we're going to have a couple of quiz questions later in the session to give away those eval accounts. Okay. Um, so be ready for the question, and these are anybody can participate in it. Good morning, Callie. Let's see. And as always, if you have any questions, type them in the chat. The team is watching that. I like getting questions during the trading session. And yeah, let's jump right in. But yeah, throughout the trading session, we will be giving away two evaluation accounts from the compliments from the Elite Trader Funding proprietary trading firm. Okay, so be ready for those. Take advantage of that. It's a phenomenal deal, and they do have some other evals that you can go through that can really help you refine and define your trading plan. All right, so today is let's just come back to this here. As we go through some of the pre-market tips, it is Friday. It is the third Friday of the month of July, and it is options expiration. Okay, now with options expiration, some things, market conditions are a little bit more busy in the pre-market, and as the session opens, uh, and then things kind of quiet down throughout the day. Now that's a typical day, okay? A typical options expiration. And typically in the options expiration week, oops, during the options expiration week, okay, the Monday prior to options expiration, and I'm quoting from Stock Traders Almanac, the Monday before options expiration is typically an up day. Therefore, Friday before the Monday before options expiration can be a place where you could look to take some positions. You can look for reversal patterns. And the statistics are pretty high when you start referring to the Stock Traders Almanac for some of that uh, documented information. Now, also during that week of options expiration, generally Wednesday and Thursday are where we have the more high probability trending markets, and they tend to prove to be uh, really good trading days. Some of you might have experienced that. Stock Traders Almanac and the statistics around it can give you insight and kind of prepare you what statistically happens over a long period of time. Okay. Now, statistics are great to watch and observe. And one of the rules that I always remember is that about when using statistics and averages is that 88% of the time you get about 80% of the move. So it's a high probability, but it's not 100%. Okay. We did have 3M. Now 3M is one of the largest market cap weighted stocks on the S&P and the Dow. So we do want to pay close attention to what 3M is doing. Their earnings call just started about 30 minutes ago. I think we have Schwab and American Express also coming out. Let's see. Yeah, we had Schwab, American Express come out at 8:30, and at 9 a.m. I think we have 3M coming out. So they just started their earnings call. Okay. Now, with that earnings call and them announcing their earnings and such, we need to be prepared for a little volatility, especially with large market cap weighted stocks. Okay. As we are trading futures, and futures are a derivative instrument that follows a cash product. Okay. The stocks that make up the index move first, then the exchange traded funds, and then it comes down to the futures markets or the indexes. So we want to be paying close attention to how that flow of information comes in. Okay. The Dow 30 stocks did pick up in volume today. So in observing the Dow 30 stocks, the volume, it is a little bit better than it has been the last couple of days. Okay. And it looks like S&P moving up right now. Wow, 3M is up $5.16, but only on 279,000 shares. Okay. Where price is moving up into a zone. I'm going to take this trade as it comes back out. Okay. Another thing that we excuse me. Another thing that we're looking at this morning is that over the last couple of sessions, we have an impulse and a correction, and an impulse, and then potentially another correction. So in a correction phase, markets tend to go sideways. They tend to be a little bit more choppy. Okay. But if you've recognized that the prior session was an impulse move, price move, okay, and then you're expecting a correction, then what type of trading would you shift to? Would you shift to a trending mindset, or would you shift to more of a kind of a faster profit taking? Okay. So what we're looking at this morning in this session, okay, since we had impulse move and then a small correction and another impulse, we're in that correction phase until we break out above the Globex high or break below the Globex low. So as we're in that trading range, we should expect shorter term profits. Okay. Now, if you're prepared to take shorter term profits, then you might trade a little larger size in order to capture a good dollar amount. Okay. Remember, we have to be nimble and change with the market conditions. Impulse, correction, an impulse and the correction, and be prepared for that. I'm going to take a short-term trade, and it's really going to be kind of just a couple of points on this as price comes out of this fair value gap area that we have pointed out within a leg base. Now, the leg base is on a different time frame. You'd have to reduce the time frame to find it. Let's see. So we're going to take a short-term trade, 63.50, 3/4. Okay. And I'm going to look for profit roughly just about 2 points on that. So we're going to come down to 63.48. And then I'll place my protective stop loss at 63.55 once the trade initiates. Okay. So as we're starting off, we're already looking for a short-term profit in this trade. We're not looking for a trend down. We're just looking for, to trade within that corrective move. Okay. So adjust your expectations to short-term profits until we break out of the range or the corrective pattern. Okay. Taking a look at the NASDAQ. Okay. NASDAQ on the Qs in particular has made a high tight base. Again, this is a correction phase, a corrective move. Okay, and high tight base tend to continue, okay, continuation patterns. Okay. So if the Qs are set up to continue, then we want to take a quick look at the stocks and see if the stocks are mostly green. Holy smoke, look at Netflix. Got to take a look at that one now. Netflix down $32. Let's bring that up. Now, Netflix dropping $32 is not really big, 2% on the, it's a big price move, but percentage wise, it's pretty small because Netflix is pretty expensive. Trading at 1,242. It looks like it's dropping in. Let's drop to a smaller time frame. What I'm curious is if, especially when stocks gap up or gap down, they're gapping to find buyers, they're gapping to find sellers. Okay. So when we interpret the finding the buyers and the sellers, we like to find that leg base group of candles. Okay. Let's try 30-minute. Because the only reason price drops like this is because of lack of buyers. So when price gaps down or up into these ranges or into these areas, there can be some pretty good trading opportunities. So we'll come back and visit that. Oh, there it is. Okay. Now, notice that we take current price and we start going down and to the left till we find that leg base group of candles. Okay. Now, this can be important, especially on these large market cap weighted stocks, um, because they do impact the futures market. Okay. So if we have a big gap down on one of the Magnificent Seven here and prices dropping like this, okay, if it's dropping right back into a demand area and then it starts to bounce back up, we could anticipate the market's trading a little bit lower in the pre-market, but just after market open, since it dropped into a buy zone, we could be looking for kind of a reaction back up. And that's why I'm expressing this a little bit. Okay. Especially when we start looking at the large market cap weighted stocks on the NASDAQ. Okay. We can see that the NASDAQ's trading a little bit lower than where the S&P and the other indexes are at the moment, mainly because everybody's focused on Netflix. But if Netflix is gapping down into a demand zone and it starts to bounce and go back up, we could look for that opportunity to kind of catch some of that momentum um, to the upside. Okay. Again, we're looking for short-term profits. Okay. Hey, Matt, let's see. Earnings were just, yeah. We are seeing that the earnings were good, so good news becomes bad for the market. Kind of keep that in the back of your mind because when those conditions in the market start to happen, good news and the market drops, or bad news and the market rallies up, those are signals of a potential change in sentiment and a change in uh, price trend. Now, also, we have coming up um, on the 21st, I think that's Monday, right? Yeah, 21st. On the 21st of July, there's some big news about um, using some new ways of, well, it's related to the crypto market, but it's new ways of transacting orders. Okay. Now, there's also been, a lot of talk about XRP as far as the crypto and XRP buying Swift. Okay. And all of those monies being shifted around may have a pretty good impact on the equity indexes. Okay. Remember, it's all monies that have been shifted away from the indexes being shifted potentially back into it with those transactions. So it's new market conditions with what I'm expressing here. and we really have to rely on where we have supply and demand areas. Okay. So a lot of things coming out. What do we have here? Okay, we just got into the S&P, our trade. Let's come back and place our protective stop loss. And I'm going to place it right up there at 63.56. Okay. And let's see what's in a smaller time frame here. Yeah, we're just going to keep looking for that short-term profit potential. Okay. Just a couple of points on this one because as price does pull back a little bit. Let's just see. We got S&P futures are trading at 9. And we got one Dow stock negative, and we have 6 positive. So 5 net positive. Multiply that by 2. Cash and futures are balanced. Now, if futures were overbought or oversold relative to the cash market, I might be looking to stay in a little bit longer. Okay. But right now, the cash and the futures are balanced, so we're not getting a big reaction. Okay. With this trade, I have $131 risk trading 5 micros. Okay. Remember, we're in a correction phase here, so I'm not looking for a big price move. Okay. Impulse correction. Okay. So we have to manage expectations around this. We're also seeing that cash and futures are balanced. And when we start looking at, oh, there we go. Nice little trade there. When we look at the Globex range relative to the daily ATR, we also use that information as, excuse me, as an indication that markets could be a little more choppy, okay, around the session open. When we have a narrow Globex range, okay, we have more trending market conditions. When we're about the middle of that, between 40 and 70% Globex range compared to the daily ATR, we tend to have more of that choppier market conditions. In our Mastering the Charts recap and review sessions, we have been, let's get rid of that, investigating, talking about, defining information around that fair value gap area. We've also introduced some things that with the ICT trading concepts and the fair value gaps. Okay. Now, I picked that up. You know, there's a lot of sophisticated and high level traders in the Discord group and elite elite trader funding. Okay. So when you're around other traders, you want to kind of get an understanding of what they're looking at. Okay. It's not a time to discount or say mine is better than yours. It's a time to learn. Okay. So again, some of the resources that we have out there, we have the TMI Discord group that we share trading ideas and concepts and things like that in there. And we have an active voice channel in there that we also use. Okay. And everybody's welcome to be a part of that. When you're visiting other chat rooms like the Elite Trader Funding, you're going to see that there's also some high level traders in there just doing their thing. And that's where I got that concept. What is fair value gap? So I started looking it up and I said, well, okay, how does fair value gap and the ICT trading concepts work with my current methodology and approach? Okay. Uh, and it works quite well. And that's what the blue dotted lines are right there is a fair value gap. So I'm not going to get into the teaching mode. We're here to trade. We just took one winning trade off of the S&P. We realize that the market conditions are choppy, designed to take your money right now, and we're in that correction. So we stuck with a short-term profit objective. Okay. Let's see. I think we filled this one. The Dow had an unfilled opening gap. I mentioned that in our prep. The Dow and the Russell had unfilled opening gaps. Let's see. I know I put it in there somewhere, but yeah, outside days, opportunities. Yeah, there it is. Russell and the Dow still unfilled opening gaps just above the Globex high. Now, this was in the pre-market, and both of those gaps have now been filled. Okay. Yeah, nice catch. A little bit of lunch money. I like that, Callie. All right, so moving on, we have a prep screen zone above. We have some updated prep screen zones that I put on uh, pre-market prep for this morning. So make sure you have those marked. I had to go all the way to a 5-minute chart to qualify the zone. And now I do come back out to the larger time frame so that I can monitor what the bigger picture is. But my zones, if they don't look exactly right based on what we show, it's because I've adjusted the time frame to get the exact picture and then come back out to a little bit larger time frame to watch what's going on. Just above on the Dow, just above the Globex high, we have a prep screen zone, and we also have that fair value gap inside of that. Okay. Now, the more comfortable you get with testing these out, okay? Our session yesterday or on Wednesday in the Mastering the Charts recap and review, and also yesterday we kind of in the community trading room, we went into the details a little bit more. Okay. We will use a protective stop loss at the distal line of the leg base group of candles. So I'm going to put an entry. I'm going to set this up. And the reason I really started liking this as we've been studying it over the last couple of months about the fair value gap inside of a leg base. Okay. So in participating with that, we have a couple of opportunities to make some trades. Okay. And over the last couple of months of putting this together, I've noticed I've missed a lot of trades because I'm always looking around at other things. Okay. But I noticed the reliability and the risk management, the trades have been working out quite well as far as price turning at these areas. Okay. What I'm leading to is that this is helping me. Oh, we finally got the Canadian dollar. There we go. Canadian dollar just came in. I have my protective stop loss on that one. Canadian dollar was one of our picks that we posted out there. And yeah, I'm just looking at the other ones. Okay. So Canadian dollar in the trade, we also have the protective stop loss at the distal line of the leg base group of candle. Now, having that in place and coming back to our Dow trade, okay, I'm going to place 2 trades on here as we start the session. Okay. I'm going to place a long opportunity to go take the trade long at 44,651. And then I'm going to use a protective stop loss at the distal line. Remember, we do have some economic reports coming out at 10 o'clock. We do have the president tweeting again out there, and he is also pushing hard on the Fed to cut rates, okay, which is causing some people to causing some market reactions, okay. So I want to be prepared for this. First trade, going long. First trade I'm setting up. I don't know if it's going to come down first or go up first, okay. 44,661. and we drop down to 5 micros. Now, when you're placing these orders, okay, if I'm filled at 661, my stop loss is going to be at 566, okay, initially, okay. I may not stay in the trade if it just starts going straight through that area. I may get out with less of a loss. But initially, I have to protect the account. Now, whatever your trade plan is, okay, if you're willing to risk 100 points, is that 51? No, that's 51. Sorry. So we're risking about 100 points on this. Now, if your maximum risk in your trading account is you have a dollar amount, okay, size the number of contracts you can trade based off of your risk parameters. Okay. I'm also going to place another order here at 918, placing my stop loss at 996. Okay. So selling short and then a protective stop loss 44.96. Okay. So I have a trade to go short and I have a trade to go long within a good price range where we could see a reaction from either news or an economic report. Okay. Russell, let's adjust for that Globex high. Russell also filled the unfilled opening gap that was up on top. And we have a small range, which is more of a pivot point. It is a leg base, leg base. Okay. Anytime that you're watching what we're doing, you got the range where we're looking to make a trade. I encourage you to go and look at what we're looking at. Okay. Teach yourself. Okay. There's a big difference between a zone and a pivot point. Okay. Now, pivot points can also act as, where you might use as a profit objective. Okay. Because you're going to see a little bit of fluctuation there. 78% of the time, price is going to bounce off of support or resistance. Okay, so and as we're looking at this level being a pivot point, it's not something I want to make a trade off of. The trade is going to be up about 23.03 with a stop loss 23.20. Okay, so make sure that you're sizing your position correctly. Okay. But I need to know what obstacles are along the way. And we also see that if price does start to come down to the prep screen zone, there's a nice pocket of points. Also could be a fair value gap. Now with the fair value gaps, it's just a 3 candle pattern. It's really a simple concept. Okay. A picture on the price chart. Okay. But having a fair value gap inside of a leg base makes a big difference. Now, the leg base must be in a buy territory or sell territory as well in order to get a kind of a higher probability trade. Okay. So we've kind of gone through the equity indexes, S&P. Okay. We've got a nice little trade, short term, remember market conditions. Okay. On that one. And let's see, NASDAQ. And NASDAQ got a new Globex high. The range is still narrow for the NASDAQ. So be prepared for that. We could look at a bigger trend. Qs gapping out. Also keep in mind on the Qs, okay, this sideways is a continuation pattern. Okay. Now with a continuation pattern, 83% of the time after a continuation pattern comes a reversal pattern. Okay. So we want to play defensive right now. Okay. And for a long opportunity on the NQ, let's see. We'll target this range down here. Okay. That doesn't look like I need to set the trade up ahead of time. I just need to wait a little bit longer. Okay. Now, crude oil and nat gas. Crude oil started off. I've been watching it on another chart here. We got the open range breakout trade there. We are seeing that heating oil is finally made a somewhat of a top. Okay. Heating oil tends to lead what crude oil does. So we use heating oil as an odds enhancer. You should be on the U contract. And I kind of got that one wrong this morning. Okay. So let's come back out and look at the I'm gonna change this and see if we have anything for the open range. Uh see no U25. Yeah, let's get down. Now the volume shifted already on that. Let's see, 605. All right, so where we have, I just put the pit open and looking at the heating oil using the open range breakout strategy, ORB. I'm gonna initiate a trade short 68.83. Okay, looking for basically that reversal to happen on the heating oil. Okay, setting up the trade, I will place it my protective stop loss at 67.07. Wow, we already got filled on the Dow. Beautiful. Dow hit the level. Remember, we're looking for short-term profits. We also are trading up slightly off of our Canadian dollar. We're up 120 bucks. Okay. Now, again, short-term profits right now as we start to get underway. We had 2 days where we had impulse price moves. Okay. So yeah, and the trend looks to be making lower highs and lower lows. So we'll say we're in a downtrend. Um, and I'm looking for a short-term profit, 73,066. I'll look for a profit target right down in that range there. Now, market conditions can change, but right now we're just kind of dealing with what we have at the session open, okay? And Dow. Now, the trade is triggered, and I need to place my stop, or my stop's already placed. I have $212 worth of risk trading 5 micros, okay? Now, generally, when I'm doing presentations like this, my risk parameters are roughly around that $200 range. Okay, now that's based off of sizing my position, okay, with an entry and a protective stop loss, and keeping my risk management right around that $200 range. Okay, you have to give the market a little wiggle room. Okay, now, had you entered that trade already, okay, and it started to go against you, if you felt bad about that, then take a small profit and get out. Okay. Now we are trading with the trend. Okay. And this is the opposing uh, supply zone where we anticipate price to move up to, okay? Since we're in that corrective phase of price after having two impulse days, using the fair value gap, a 1-to-1 or 2-to-1 type trade can be a good profit objective, okay? So I'm going to set that up for a short-term profit objective. Not going to hold on too long. 44,690. See, I want to keep my trading strategy. If I'm going to take the trade, take risk on the trade, and I understand that the trading environment is a little more elevated risk, okay? And the conditions were in a corrective phase versus an impulse, okay? I want to adjust my trading plan, okay? Now I'm starting to, as I look down at the daily chart, I'm kind of rethinking that short-term profit because on a daily chart, this is a very powerful um, bullish price pattern. It's what they refer to as a bull flag, okay? So instead of taking a profit at 1-to-1, once price breaks that 1-to-1 at 44,690 area, I'm going to adjust my stop loss up. Okay, so once price trades above, so I'm going to remove that. Okay, and then we'll adjust our stop loss up to 609, which will cut our potential risk in half. Okay. Okay. Wow. Okay. S&P still working. Got the Dow working. Russell. Russell has not hit any zones, at least on the larger time frame. Okay. Oh, we did hit that fair value gap on the 5-minute. Funny how those work, you know. But I do encourage everybody to dig into the understanding of what that fair value gap is. Okay. Wow, Netflix just kept going down. One second. All right. Wow, that's turning out pretty good. That Canadian dollar trade, right off of our fix. What else do we have setting up? Everything else we're still pretty far away from. The Dow worked out really well. And so if you're interested in our methodology and our approach, there's a lot of information on our website. There's some smaller courses to kind of help you get familiar with things that we're doing, to kind of get your feet wet. There's a lot of stuff that's on YouTube that we've done in the past to help you get an idea of the leg base group of candles and where to look for potential trade opportunities. Okay. Um, I encourage you to investigate, check things out. Okay. There's a lot of different methods and approaches out there in the marketplace. Okay. But these levels and zones are quite incredible. There is most often some unfilled orders. Now we teach the concept of, prices dropping to find where we have a large stack of buy orders, okay? And the picture on the price chart is what helps us investigate where the buy orders are at, okay? We start off with several different smaller lessons to help you understand and start training the eyes where to look, okay? Pretty cool stuff. All right, we do have a trade set up on crude oil, and just heating oil looks like it just stalled out. I am looking to take a short trade on crude oil, and I do need to look for where we're going to find profit. And on some interesting things about the crude oil and natural gas is around contract rollover, you're going to have some volatility, okay? And then you have to understand with futures, you have contract rollover, then you have last trade date, okay? Now, last trade date is also we often see the market has dropped in price up to that last trade date, okay? So I have the leg base group of candles that I'm just identifying up here right now, okay? This is creating my zone. And inside that zone, I'm going to look for that fair value gap in there. I'm using a small time frame, 5-minute chart. Now you might find that inside of that leg base, there can be two of the fair value gaps in there. Okay, remember the fair value gap is a 3-candle pattern, so I got 1, 2, 3 candles, and the distance in between, that's that fair value gap. Okay. We also have another one just below it. So candle 1, candle 2, candle 3, and we've identified 2 fair value gap areas inside of a leg base, leg base. Okay. When trying to decide which one would be more of a conservative approach, a trade opportunity, when you take that full range or that full swing down, often go to the one that's deeper. Okay. So as we have 2 trading strategies we're working on right now. One is taking a trade in a zone using a fair value gap. Okay. 67.32 would be an entry going short, making our stop loss right up on top. Okay. The additional trade right around the pit open is using the first 5-minute candle. Call this an open range breakout trade. Okay. We always want to lean towards heating oil as an odds enhancer. Okay. Now, heating oil is starting to show just a little bit of weakness here. So I don't anticipate crude oil to get up into our zones. Okay. Also, what we talked about yesterday, using fair value gap information or using our leg base from our Mastering the Charts course material. This leg base does not become active to take a trade until price moves greater than 1-to-1 away from it. Okay. Now you can have your rules set at 1-to-1 or 2-to-1. So this is just still noise going back and forth. Okay. Even though we have it marked, it is not active until price moves greater than 1-to-1 away from it. Now, if I get filled on the trade going short, my stop loss will be 67.07. Okay. Now, taking current price and looking down and going down to the left, we want to find another place where we have an opposing zone. Okay. Let me do that. So we got to have a profit objective. Yeah. And it looks like it's going to be roughly right around in here. A little rally base rally formation, but you can see there's a leg base group of candles there. Okay. Not a place to go long, just a place I would use for a profit target. Okay. So setting up this trade, entry going short, 66.83. Let's see, make sure I get the right contract. MCLU25. Okay, we're on a September contract right now. Selling short, 66.83. Once I'm filled, I'll use 67.07 as my protective stop loss. And my target, down here about $66, okay? So in trading some of these products, you might get to know their personality and their characteristics around the pit open or starting 2 hours before the pit open, or how these products react versus the Globex range compared to the daily ATR, and collecting all of that information. You start to see that there's patterns that come into play. Okay. And once you recognize those patterns, you may incorporate a couple of different strategies. Now, our main strategy is supply and demand, waiting for price to return to the origin of a strong move down or up, where potential of the unfilled gaps. Okay. What do we got going on here? Canadian dollar. Let's monitor the US dollar. Yeah. So at a glance, the pre-market indicator, okay, indicated that it was bullish this morning. Okay. NASDAQ pre-market indicator developed and used by the NASDAQ exchange. Now, it was developed in the Philadelphia exchange, okay, and the NASDAQ bought it because it was pretty accurate. When the PICOS went down. Now, the reason we watch the pre-market indicator is it has a 92% correlation as the trader's sentiment at the open. So when it gaps up and keeps moving up, the trader's sentiment tends to be a little more bullish. Okay. When it gaps down, trader's sentiment more bearish. Okay. We also got a nice, in using that, let me finish up on the pre-market indicator. What the pre-market indicator just measures, it's very similar to the tick. Okay. When we're referring to the internals, we have the tick, which is the NYSE number of upticks over downticks for the New York Stock Exchange. Okay. Well, the pre-market indicator is a measurement of only the NASDAQ 100 stocks trading from 8 a.m. till 9:30 a.m. Eastern. Okay. So when we have more upticks over downticks on the NASDAQ 100, the implied is traders are feeling a little more bullish. Now we have to take that with a grain of salt, because if traders are short covering, that will show more upticks over downticks. Okay, not necessarily buying to go long, but buying to cover a short. Okay, so you have to weigh things out here. And the way you would weigh them out is you would take another glimpse of what the trend is doing and also the volatility index. In the pre-market, they also have readings for pre-market trend and pre-market volatility index. All of these together can help us understand the trading environment as the session starts to get underway and get closer to the opening. Okay. We also use the dollar, the 10 and the 2-year yield as an odds enhancer as well. The trend, price moving down, okay? We want to see that the dollar, the 10 and the 2-year yield are correlated. If they are all correlated, and as a reference, use about the last 5 to 8 candles, okay, in each one of these. If they're all going down, okay, that's a good thing. Easier trading conditions, okay? Now, if the dollar's up and the bonds, or sorry, the yields are down, things could be more choppy. A good reading to wait a little bit longer, okay? And often we see the discrepancy where they're not correlated when we have an inside day versus an outside day. No, all these things that I'm making reference to, we refer to in our pre-market tips as part of our pre-market information gathering. We have a small course on the website that describes in great detail why it's important to watch the stocks and why the indexes. What does it mean when we have a narrow range versus a wide range, and how do I reference that? What does it mean when the Dow 30 stocks in the pre-market are traded on very light volume versus very heavy volume, and so on? Outside day, inside days. Okay, all of these little things that we check lead to what we've already studied, that if we're on an inside day, that taking breakout trades often fail, and trades taken later in the session work out better than trades taken at the beginning. We often noted on an inside day that the markets are a lot more choppy, not trending, okay, until they break above or below the prior session's range. All of those little details can be, I think we did like a 2 or 3 day little class on the pre-market routine. Why we look at the information or what information we're looking at, why we check it, how it impacts, and then the resources and stuff. Okay. Cool stuff. I mean, and I'm making reference to that every single day as we go through this. Now, for our Canadian dollar trade, we would like to see that the yields and the dollar start going up while the Canadian dollar would continue going down. Okay. Well, we are getting some whipsaw. Our Dow trade, okay, still working, giving us a little heartburn. Okay. Now, keep in mind, the daily chart is pretty bullish. Okay. Now, if this is making you uncomfortable, you can also size your position a little smaller and then add on as price starts to turn back out in the direction. Okay. If this dip down, you don't feel good about it, you can always take a smaller loss rather than waiting for price to take you out. Now, I'm going to let the trade work. That's part of my trading plan. Okay. I realize that I have $200 risk on the trade when I initiated it. Okay. And we're seeing Canadian dollar bounce a little bit. We just need to see a good green candle on the US dollar, and then this should start working out quite well for us. Yeah, it's options expiration. That's what we've got a little action right at the first part. We are in a corrective pattern, a phase from what we've seen the last 2 days being an impulse wave. We have to anticipate that short-term profit taking is going to be the game today. Okay. And now, let me give a little example here. We have noticed on the daily chart on gold that we've had an upward sloping channel and it's been about 70 points. Okay. Right now, price action is in kind of the middle of that range. Okay, current price. We do have a demand zone down here with a fair value gap inside of it. But we need to see that price moves 1-to-1 away minimum before using this. Now, very often I'll plot the zones. That doesn't mean, the price coming back down, you're going to have a winning trade. Higher probability that you will have that winning trade is if price moves at least 1-to-1 away, the size of the leg base, and then returns to the area. Okay. So even though I have a zone and I have everything marked, okay, it's the zone itself is just not active at the moment. Okay. We have a supply zone up there on the gold where it hits resistance area. 3388, 3397 is our leg base zone. Okay. So when you're starting to set trades up or start doing your pre-market, we just got crude oil. Nice. Okay, so we're short crude oil. Let me get my stop loss in 67.07. Okay. Profit target 65.97. Or when it feels good, we do have a couple of pivot points down here where price may bounce once it gets to that level. Okay. The strategy here is an open range breakout trade. Okay. So now we have a trade setup or in a trade here on crude oil. We have $120 risk trading 5 micros short. Okay. I like to specifically say what my risk is out loud, because right now, if I say, whoa, that $120 is too much, okay, I'm more comfortable taking a $50 or $60 loss, okay, then I can leave my stop loss where it's at and I can downsize my position, okay? Because sometimes we place trades and we don't really pay attention to the dollar amount, and then we get like this whole crap moment. That's way too much risk. I don't think I could recover that throughout the trading session. So if you ever feel like that, once you recognize your potential loss on a trade based on your stop, okay, you can downsize or you can simply get out with a smaller loss. Okay. Uh, Looks like the Dow is working, holding the level. S&P, still a pretty good trade on the S&P this short term. Yeah, we're nowhere close on the NASDAQ. And we don't have much going on here with the Russell. Okay. What do you guys think? I'm not seeing any questions. You guys getting all of this? If you have questions, ask them along the way. Okay. I'm happy to explain what we're doing here. Okay. But let's take a moment. My team has come up with some quiz questions. We're going to do the first giveaway from the Elite Trader Funding eval account. Okay. So it is a question. I'm not sure if it's a fair question or not. Okay, but here's the quiz question. For the first person that can answer the question. All the answers are on the website, so if you know where to look, you can go get it. It says Jeff Manson has been trading since, and A is 1947, B 1967, C 1997, or D 2007. So type your answer in the YouTube chat and go, oh, it looks like Roe got in there too. Nice job, Roe. Yeah, 1947 was a little bit before my time, and 1967 I was not very old, so if I started trading then, must have been some type of prodigy there. All right, so let me know, team, if somebody if we get that. Row answered the question correctly as well. And we have one more that we're going to give away a little bit towards the end of the session. All right. Come back out to our Canadian dollar. We do have a short-term profit you could grab. Okay. What I'm going to do at this point, let me double check the dollar. The dollar's starting to get a little bump to the upside. So I'm going to reduce my risk on this. I was anticipating making the profit a little more quickly. Okay. But the dollar is now starting to bounce, hasn't given us a full change in direction, but it is making me want to adjust my stop loss as we get closer to, well, right now we just have the 10 o'clock reversal. So I'm going to adjust my potential $200 risk down to a $20 risk. Call it taking the risk off the trade. But it is really important that you have your trading rules. We have an initial stop loss at the distal line of the leg base. When you're placing the trade, size your position correctly based on your trading plan. Okay. So I have adjusted my stop loss, and we'll kind of let things settle out here. Hopefully we'll get a bigger turn on the US dollar here shortly. Dow trade did bounce back up, but is still just trying to choose a direction. Okay. You may ask, well, can I get in now on the Dow? Well, look at your large time frame. What does that chart tell you over here on the daily chart? Does that make you feel bullish? Does that make you feel bearish? Okay. For me, a bull flag tends to be bullish. And we often look for the breakout on a bull flag, a pennant, a triangle. We look for the breakout on the fifth time. So once, twice, three, four, we're at that point where we could have a breakout to the upside on a daily chart. Okay. So if I was planning to enter the trade now, I could enter it at the market, but I would still use the distal line as my protective stop loss. If you're still within your risk parameters and you have a little, let's just say you had $100 risk versus a $200 risk, your maximum size. Okay. You could also add on to that. We call that a little bit of cost averaging. Now, if you're trading in a proprietary trading account, a prop firm, like a Elite Trader Funding, you want to make sure that you check the rules around cost averaging, buying into a losing trade versus buying into a winning trade. Well, make sure you know all the parameters of your proprietary trading firm. Okay. And don't for a moment think that that is limiting you. Okay. Look, when you're trading other people's money, they may have some parameters around what they want you to trade, how they want you to trade. Okay. And what you're working towards is another source of income. Okay. All right, so our Dow trade is getting close to stopping us out. Okay.
Order filled.
Just stopped us out. Now, being stopped out is part of trading. Okay. So I'm not embarrassed by that. That fit within my trade plan. Okay. And I just said stopped out. Okay. So let's I don't have, well, let's see, we do have an area right there. So my next opportunity, looking for, and once price goes through your zone, just go ahead and remove it. Now I'm not done trading the Dow. I'm going to look for another opportunity
Order filled.
to get in as well. Looks like crude oil moved out. Okay. And up you can see heating oil got a bump off that too. Okay. Kind of reminds you, going back to what we were talking about, the short-term profits, because we did have a nice little profit on Canadian dollar. Not much on the crude oil, but we did have a little bit on the Dow. The dollar continues to go lower, or is pushing a little bit lower, so that Canadian dollar trade might be you could look to take a smaller profit. And I think I'm going to, yeah, I'm going to take a smaller profit and then look for price to come into the zone. Okay.
Order filled.
Okay. So I'm going to look for price to come in the zone area a little bit, and then I'll take it as it starts to leave. And we use that as a confirmation entry. Okay. All right, let's come back here. Crude oil. Okay. That gas. Yeah, I think I got out of that Canadian dollar too soon. Give it just a couple more minutes to see. Okay, Dow hit that area. All right, let me set up the trade on the Dow. 44,450. Stop loss 359. Now, if price comes down to that zone, using this price move up, I want to see if that area aligns with the Fibonacci price extension. The price extension and how price is dropping into the zone can alert me to what type of trade to be preparing for. Now we have a steep slope, okay, which is an odds enhancer, the slope or angle of the drop could be leading to a V-shaped reversal. Remember, we're looking at potentially a bull flag over here. So buying on the dip, if we get a strong drop and we make a V-shaped reversal, then the springboard back up, we want to stay with the trade to potentially get up to our prep screen zone, which will be our target. The Fibonacci price extension for a V-shaped reversal would be the 314, 261.8 or 224 extension. If it's going to turn into a head and shoulders pattern, it's generally the 127 or 1618 extension. And we're already past the 113, which would have been a momentum reversal. Okay. So when we put those lines on there, look right down at the bottom. We got a 314 extension right into that range there. Okay. Now, with that 314 extension, the projected move back to the upside aligns with the 161.8 or 224 extension. Okay. So let's see. That would put the price target, this level, and this level. Okay. Which takes us right back up into the prep screen zone. So looking to go long, 44,450. You may also want to consider when looking at the leg base, how did the leg candle leave the zone? Okay. Is the leg candle leaving the zone bigger or smaller than the leg candles in the zone? Okay. If it's bigger, price often goes a little deeper into that zone. Okay. And the zone can be used twice or multiple times. If it's smaller, the zone can be used only one time, and price does not often go too deep into it. Okay. Now, as you're watching this, especially if you're watching the YouTube live or watching the recording, you see that we are using a forward-looking technique. We're using the picture over on the left-hand side of the chart, where we have connected that picture with a lot of successful trade. Okay. And one of the ways to do that is pull up any price chart. I'm just going to randomly pull one up like IBM. Okay. And when you're looking at the price chart and you say, man, I wish I could have gone long right at that point or gone short right at this point, you start seeking out what you desire to make a trade or what trade you desire to have. Okay. Don't look at what's going on right here. Just say, okay, well, price came down, hit this level. Excuse me. And I wish I could have went long there and took the trade back up. Okay, so that's an entry about 282. Nice move back up, 287, $5 move. Okay. Well, if I want to enter a trade and that's my desired trade entry like this, then I need to look over to the left-hand side of the chart and identify something over there. Okay. Now, what's even without even adjusting the time frame, I can see that we have a leg base group of candle. Now, that zone is pretty wide. And even if I go to inside of that with the fair value gap, okay, we still see that the zone is pretty wide. Okay. Now I can reduce the time frame. Let's go down to about 10-minute chart and see if we can get it smaller. Now, sometimes you can get a smaller zone, sometimes it's just not there. Okay. But it's qualifying the area where you anticipate to have taken a trade. Oh, there we go. We have the leg in, base, leg out. Nope, it's still, oh wait, we got a gap. That's what it is. So we're able to make that zone a little smaller. Now gaps represent a leg candle. Okay. So dropping down to a 5-minute chart, we found another leg base. And our desired trade price dipped right in it, shot out of it. So the picture over on the left-hand side of the chart is what we're looking for as an opportunity. Something that's consistently there, way over here, several days before price returns to that area. Okay. My whole point being is that when banks and institutions get into the market, they leave a footprint when they don't get all their orders filled. Okay. And price often has that leg base group of candles, has a very strong move away from that area. When price returns, this is where we're looking for the opportunity to go long because we expect there to be some unfilled orders over on the left. Okay. Oh, I got out of that one too soon. Yeah. Anybody stay in the Canadian dollar? That one's looking pretty good. Come back to our equity indexes. S&P is moving lower. NASDAQ. Dow's still working its way down to us. Russell's got a long way to go. Okay. Whoa, got the yawns this morning. All right, our advancing issues over declining issues are getting into that no trade zone area. Okay. Now this is for the NYSE. This is the advancing issues over the declining issues. Now, this picture itself does not make a trade, but it does give us uh, an idea of the market conditions. When we have equal number of advancing stocks over declining stocks or within that range, the market tends to be more choppy. Okay. We're waiting for a price to get to an extreme to make a trade. Short-term profit taking is probably going to be your best friend rather than staying and waiting for a trend to develop. Okay. Along with that, we have the tick, $ TICK. This is the short-term. Um, sorry, this is NYSE tick takes the advancing volume over the declining volume for the New York Stock Exchange. Okay. So these are really good feelers for understanding the stock. Remember, the stocks move first, exchange traded fund moves second, and then the futures move after that. So it's good that we have a gauge. All the um, all the Dow stocks trade on the NYSE. A few of them still also trade on the NASDAQ. Okay. All of the Dow stocks trade on the S&P 500. So the Dow and the S&P are highest correlated. Okay. You see all these little nuggets of information. Many of them don't make a trade, but they do help us understand the traffic condition. Okay. Hmm. That's tempting, but it's still not a qualified leg base until we get enough price movement out of that area. Exchange traded funds getting a little bit of a bounce. Platinum coming back down. Oh, missed that one. All right, we're ready for the second quiz question for our giveaway for an Elite Trader Funding eval account. Are you guys all ready for it? Let me know in the chat, okay? Are you ready? And this is open to everybody, and this will be the next question. First person to get it right. Okay, it's a multiple choice question. And I didn't come up with these. All right, so what does Jeff Manson help traders develop? A savings plan. B, obviously not a fitness plan. C, a trade plan. Or D, a diet plan. What do we help traders develop? All right, Roe got it again, got letter C. Anybody else out there want to, we already got one for Roe. Can't give you two, but go ahead and type the question. A, savings plan. B, fitness plan. C, a trading plan. And D, a diet plan. Thanks for participating. And thank you. Just want to give a good mention to the Elite Trader Funding for allowing us to give those away for traders to try a proprietary trading account. Okay. I do think that trading in a prop account, passing the evaluation, and then getting into the funded side of it, okay, is a good step for traders to help them find discipline in their trading plan and test their skills out without risking your family's money or your money. Okay. It's not as easy as everybody thinks, jump in, buy 100 contracts and, you can make it really quick. Okay. When you start dealing with the psychology of trading, real capital, or you got to pass a test. Now, that's a concept. What if we had to pass a test before we could even trade our personal live accounts? How many of us would pass it? Okay. In order to get permission to trade your funded account. Okay. Really check out Elite Trader Funding as far as using the evals to test your skills. Once you pass the eval, you move on to an Elite Trader funded simulated account that is funded, and you get paid on the monies that you make. Your goal is to get up to a live funded account where some of the rules and restrictions can be lifted compared to the ones you have going through the eval and so on. Basically, you're proving it to yourself and to your family and getting paid for it while you're trading, okay, without having the extra risk. All right, I'm watching the Dow because we're getting ready to wrap up our session here. And we're seeing that the Dow is still coming down and I do like this one. I'm going to set this trade up on my sim funded account. And let's see, got the Dow, and I'm going to use 3 mini contracts. And we're gonna place a limit order 44,450. Okay, that order is set. I will have a stop loss and I'll look for that bounce back up. Okay. So if you liked our trading session today, you like the information that we're sharing here, look us up on the marketinstitution.com website. That's that famous phrase, like and follow. Okay. For more updates, we do these live to YouTube sessions each Friday to help us get some more exposure to what we teach and how we train you to see that picture on the price chart. Okay. And let's see, we still don't have any positions. Right now, we're waiting for the Dow. Oh my gosh, did I get out way too soon? Does anybody stay in the Canadian dollar? Somebody, that was a great trade. I mean, that would have hit our target too. But we made a small amount on it, and the more commitment we get from the US dollar going up, Canadian dollar will go down. The other thing I want to remind you of is that our zones are a little further away today. Be willing to be patient and wait for price to arrive where you need it to arrive to manage risk and take your trade. Yesterday and the prior day, the last two sessions have been impulse days. We are expecting more of a corrective day today. That means short-term trading, short-term profit taking. Okay. We always have to be able to adjust to the market conditions. And one of the best odds enhancers that we have that helps us prepare for that is looking at what happened the last couple of days. Were they impulse days or were they corrective days? Because if we've had a sideways choppy market, where everybody had been beaten up for the last couple of days, okay, we would be then looking for an impulse, an opportunity to get into a longer term trade, okay, and stay with it, bigger profit potential as well. So when we acknowledge we have correction days versus impulse days, and we see that it's impulse and then correction and impulse and correction, we can use that to manage our expectations on a potential trade, okay? Especially when it comes to taking profits. See, if you're looking for a long, a runner, so to speak, after we've had a couple of days of an impulse, it's probably not going to work in your favor. Okay. So become aware of how the markets are moving on your higher time frame, whether you've had an impulse or you're looking to be in a correction. The correction phase, you look for shorter term trades, shorter term profits. When you're coming out of a correction, you're looking for longer term trades and much bigger profit potential. So as we get close to wrapping up our session today, please make sure you like and follow. We're excited to have everybody here with us to see what we're doing. Okay. And yeah, who got the accounts, team? Hey, Roger, good to see you. The diet plan. Yeah, Roger's a long-term student. I met Roger in Singapore when I was teaching over there. Good to have you here. All right, so our session for this morning is complete. I still have an open trade to go long the Dow, 44,450, and a stop loss at 44,359. Okay. We're looking at that area as a V-shaped reversal. Okay, so as price does drop into that, if it does hit our entry, we will look for a stronger and move back to the upside with our profit target at 44,883. Okay. Have a good Friday. Remember, it is options expiration, and I'll be over in a Discord room hanging out, and just want to make a reference to that Discord room. Give me a second. Can we post the link for our Discord room in the YouTube chat, please? If you wanted to follow up on some of the fair value gap information, we have our Mastering the Charts recap and review that you can watch the recording of that. Where I will be is in the voice channels. There it is, active income voice channel. And that's where I will be hanging out the rest of the day. Okay. So if you want to hang out and trade, we got voice there. We'll see you there. Okay. Thank you, everybody. Have a good Friday, good weekend, and look forward to seeing you next week. Okay.